Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh edition of Opening Bell with me, Lovisha Darad. Well, we are back after the budget that gave a surprise for the middle class and was vehemently a very consumption-driven one. But it's a brand new week and of course, US President Donald Trump's tariff missile will set the tone of the trade today. Over the weekend, we saw that the US President has imposed about 25% tariffs on imports from Canada and Mexico and 10% on Chinese imports. Now, while Canada and Mexico have promised retaliatory tariffs, China has gone a little bit with a milder approach. They're saying that they would challenge these tariffs through the WTO, which is the World Trade Organization. Now, the market reaction is quite negative. US futures are, sharply down. Dow futures are down over 550 points. Nasdaq futures also down over 2% at this time. Quite a bit of an uncertainty going on in the global markets. Treasury yields are back above 4.5%, and even the dollar index has strengthened and they are back above 109. Asian markets also reflected the bit of a caution, and GIFT Nifty is also pointing out to a gap down start for our Indian markets. Even the pre-open rates are also not doing well. In the pre-open rates, we can see that the Nifty is below that 23,400 levels, 23,319 coming in for Nifty at the pre-open. But yes, after the budget boost to the consumption names, today these developments from the global front will also create an undertone for our own markets. And as usual, Q3 results that will continue to sway the stock specific action. So lots more lined up. Keep posting your stock related queries and we will take them up shortly. Moving on, let's take a look at the top headlines this hour. Mexico and China. Canada and Mexico retaliate with counter tariffs while China has announced plan to challenge US tariffs through WTO. Oil prices jump as US tariffs raise fears of crude supply disruption from two of the biggest suppliers to the country, but prospects of lower fuel demand capped gains. Tax sweetener for the middle class, firm on fiscal consolidation and continuity on capex. Finance Minister Nirmala Sitharaman's 8th consecutive union budget aims to give fillip consumption by putting money in the hands of the middle class. Also, no news is also good news as status quo is maintained on capital gains tax as it was widely expected. All right, in the last session, we saw quite a bit of a volatility where the Nifty and Sensex did end up flat in the red. Today also, it is pointing out to a very gap down start for the markets. In the last session, we saw consumption and tourism stocks led the upper hand after the FM opted to bolster the middle class by announcing some good tax relief measures up to 12 lakh rupees. Now, what else we need to watch out this week? We have the RBI MPC meeting, which is meeting later in the week, Wednesday onwards. And consensus is calling out for a 25 basis point rate cut after RBI stepped up its liquidity measures that we saw last week. And we'll watch out how the rate sensitive stocks also take a note during this trading session week as well. Apart from that, as usual, Q3 sessions, as I mentioned, it will continue to trigger the stock specific action. Asian Paints, Titan, Airtel, all of them will be reporting their Q3 scorecard this week. So watch out for those names too. And so now just a couple of minutes before we go to the opening bell, it's already 9:15 and we can see the first rates which is coming up, that is your Sensex is down about 600 points at this time and very somber start for the Indian markets. And we can see that Nifty is also opened very sharply down 200 points, downtick coming in for the Nifty 50 to 23,300 levels. Below that we have opened. Advanced decline ratio, definitely the declines are taking an upper hand at this point of time and all of the sectors have dipped into the negative territory. Apart from Nifty Pharma Index, which is eking a bit of a slim gains and has opened flat in the green, but otherwise all of them are not doing well. All of them have sinked in the negative territory. Bank Nifty Index especially seeing a sharp cut of about 1%. Nifty IT also not doing well. Nifty Metal Index especially seeing about 2.5% cut. Nifty Realty Index, 0.9% cut coming in. Broader indices, after a long time also, that is also not doing well. Mid cap seeing a 1.5% cut. Small caps also 1.2% cut coming in for the mid cap index. India VIX has sharply risen, 6% jump above that 15 levels that we can see at this time. And top gainers on the Nifty include Maruti Suzuki and Titan, both of them only two Nifty 50 gainers at this point of time. And losers on the Nifty can include the likes of Hindalco, Bharat Electronics, L&T, Tata Motors, all seeing a cut of about 2 to 3% at this time. But let's quickly get on board with our technical expert of the show, Sudeep Shah of SBI Securities. Sudeep, good morning. So good to have you.
Good morning, Lovisha.
Sudeep, the budget is out and now the Trump's missile is also fired. What can we expect from Nifty this week? Because we have opened below that 23,300 levels as well.
Absolutely, Lavisha. See, if you see last week, it was most of a pre-budget rally from oversold zones that we had seen. But see, income tax, personal income tax cut giving a boost to consumption is a very, very big welcome step. But I feel there was slight disappointment. If at all, we have to just try to find out something which the markets may not have liked is that the reduction of say capex or the less focus of railways or defense of what all these names or all these sectors which were upbeat ahead of the budget in the last 1 month. So I feel that is that pocket, that is their space where we could see some selling pressure also in the coming few days, because they were quite upbeat going into the budget, expecting some big bang reform statements. But that was not the case, and that is the reason we are seeing some kind of a sell-off in those names. And the Trump tantrums they've just restarted. And you could expect this on an ongoing basis, on a daily basis, with Trump just trying to do some posturing with a lot of these nations, trying to just have his America first policy in place. So I guess that could still be there. But for me, what I feel is that India in some way would be insulated given the kind of relations that we have, and there could be some backdoor talks happening. So I feel it might not be directly or rapidly impacting our country as much as it's impacting Canada, Mexico, and all those nations where there are some serious tariffs being put. So it's going to create global volatility, some supply chain issues, and everything. But yes, overall, I feel now from a market standpoint, from a Nifty standpoint, if you see 23,500 would be the
FMCG, auto, or even the hotels theme look on the charts.
See, all these themes, auto, if you see specifically, if you see Nifty Auto Index, I guess there was that sell-off that had already happened pre-budget, and relief rally plus this boost in consumption that has led to the auto index once again rebounding back beyond 23,000. And I feel till the time 22,900, 22,950 is held, this index could continue its reversal back up to 23,500, 23,580 zone in the coming week. And we feel that say Eicher Motors, the two-wheeler names, they could be in focus, as well as a few auto ancillaries also. Now coming to hotels, we feel that this theme would be an ongoing theme even without the consumption boost. We were seeing the hotel industry and the hotels giving good numbers. So with this additional boost, I guess it's just going to add up to that positivity, and that is the reason we are positive on a lot of these top hotel names.
Okay, all right. Sudeep, do you believe that the PSU's party is over? Because railways, officially, the budget kept the capex spending quite lukewarm. So how do you expect the likes of railways or even defense stocks to do at this point of time?
Lavisha, see, railway defense, we can't still say that the party is over, because if you compare the capex that was there 3, 4, 5 years back and you compare it today, it is way, way, way ahead. It is just that the disappointment is if you compare the numbers from the last budget and this budget. So if the view is extreme short term, then yes, it is a disappointing move that you see the numbers lower. But if you have a medium term, if any trader investor has a medium term outlook on these names and wants to look at a long term vision from a Viksit Bharat 2047 perspective, then I guess these are the sectors that will lay the foundation of a beautiful future. So my sense is that rather than just having a short term view on this, they obviously short term disappointment would be there. You'll see 10-15% more stocks falling from the current levels, all these names which were upbeat going into the budget. But yes, post that it will settle down. then it will be the earnings and everything which will dictate the stock prices, as well as and see, we also need to understand that everything is not happening in the budget. Lot of things are happening outside the budget. The rest of 364 days also have a lot of announcements that are coming by for these spaces, whether it is railways, whether it is defense. So look, we are quite constructive. We are quite upbeat on this space. It's just that this short-term correction can be used as an opportunity to add up from a long-term perspective. That is what is our take on these. Avoid from a extreme short-term perspective, because there will be a lot of choppiness, volatility. But if your view is from a medium-term perspective, then these are the names, these are the spaces that one should at least start nibbling into and keep adding in your portfolio.
Let's take some viewer queries. Well, first query coming in from Naveen. What is the view on Zomato? Zomato, the stock is very sharply down from its all-time high, Sudeep. Even the Q3 results were not quite impressive. What can we expect? The budget did mention a lot of consumption boost, but do you expect the stock to recover from here on?
Lovisha, I feel a lot of correction has already happened in this name around last the quarterly results that had come. They expected some kind of an additional period will be required to just come back into that profitability thing. So what we feel is that it's okay. See, you could have a one-off quarter, but given the boost that the consumption per se and the retail consumption, which particularly uses Zomato, the segment that uses Zomato, they are going to be the biggest beneficiary. So my sense is that we feel that this new age tech companies, whether it is Zomato, whether it is Swiggy, or all these other digital focused companies, they are here to stay for the next decade or so. It might be that given the kind of volatility that these names are, and they have some trader favorite names also, you include them in this. So there is obviously going to be some trade-off between volatility, derivative positioning, and everything, some result disappointments. But if the view is extreme long-term, then yes, these could be the next big thing that you would be talking about. So yes, we feel that Zomato, Swiggy, and all these digital-focused companies could and should do well in the next coming few years. And these current volatility, this current choppiness should be used to add from a long-term perspective.
Okay, all right. Let's move on to another viewer query. That is your Anand Swaminath is asking the view on Exide Industries for a 1 month horizon. Exide Industries, how does the stock look like on the chart, Sudeep? Very muted sense of Q3 earnings came in. Net profit was up about 2% year on year, and even the revenue was flat on a year on year basis.
Lavish, if you see the charts of Exide, specifically, the stock had topped out somewhere around July, August, and from there on the weekly as well as monthly charts, it is creating a lower top, lower bottom formation. And for any kind of major reversal or any kind of say stability in the stock, I feel that the level of 396 should be crossed. And until and unless 395, 396 is not crossed, I would not advocate any bottom fishing in this stock, because every time there is a small rebound, there is a small move from the oversold zones in this stock, right at these kind of resistances, which are the previous monthly highs or the weekly highs, the stock again faces selling pressure. So for me, 393, 395 is that zone which needs to get cleared. The resistance has to get crossed for a decent up move up to 430, 445 zone. So if someone is planning to add, then one can add only if when the stock closes above 395 with a stop loss of 380 on the downside.
Okay, all right. Let's move on to another viewer query. That is your on Raj Nilhani is asking the view on Godfrey Phillips. Godfrey Phillips, from its September highs, the stock has corrected tremendously. Sudeep, 40% down we have seen. What can we expect next for the stock going ahead?
See, Lovisha, the stock had started correcting since way back in September 2024, right from the 8,000 mark. Almost it halved, it cut 50%. We had seen a down move in that from the highest levels. But what I feel is some kind of a bottom formation is happening. You see, even in August 2024, when the stock had broken out above that resistance of 4,500 and then moved to 8,000, the stock has once again taken support at that old breakout zone. So what we feel is that yes, from a short-term perspective, the pain is over, and the stock can now at least consolidate at the current levels and above 5,100, this could continue its up move up to 6,000 and 6,300. But 5,150 needs to cross. And overall, now from a medium to long term perspective, also we are close to some kind of an intermediate bottom. So yes, at least the downside does not look that we're not aggressive on this stock, but yes, we feel that the downside is now done with.
All right. Let's move on to another viewer query where Pooja Khanna is asking that she wants to invest in NCC and what is the good time to enter this stock? What can you what do you suggest, Sudeep, as an entry level for NCC?
No, I would suggest Pooja to please avoid this stock, because if you see the charts here, right from December first week, the stock on a weekly chart also is forming lower top, lower bottom formation, except for a week where it just closed positive. That also mildly in the green. But overall, it had first faced resistance around 320. It cracked below a support zone of 275, and now it is even broken its key support zone at 230. So for me, 235 to 38 now will act as an important resistance on the upside. And the severity of the selling pressure also could be seen from the very fact that on the budget day, the stock post opening went up to 260, and the same day it corrected back around 12 to 15% from the highest levels and closed at the day's low around 230. And today it is acceleration. The acceleration on the downside is still visible in terms of selling pressure. So what I feel is that the stock is still headed down. It is into oversold zone. So you would see some occasional bouts of short covering, but yes, till the time 235, 238 zone is not crossed, the larger trend remains on the downside, and the viewer should avoid adding this stock from a bottom fishing perspective.
Okay, all right. Let's move on to another viewer query that Omegas is asking the view on Trent. Trent, how does the stock look like on the charts? You know, it was the best performer in last year, but January month, the stock was completely under pressure. What can we expect next for Trent going ahead, Sudeep?
See, Lovisha, this is a double-edged sword. Now, whenever we discuss about Trent, it is a double-edged sword. It is a company which is delivering on its numbers, aggressive returns, Q on Q in terms of numbers, addition, store additions, PAT, whatever you say on all parameters. But equally, it has been now the rally has been too fast. If you see last 1 year's move, although the stock corrected from 8,000 way up to way back till say 5,300, 5,500, and we have seen some kind of a reversal, and the reversal in trend was also from an important support zone where it started, where it had broken out in July 2024. So here also we feel that some kind of a base building activity is happening at higher levels. If the company continues to surprise with the kind of numbers, with the kind of results Q on Q it is sharing, which I feel sometimes it is difficult and too much from an over expectations perspective. But yes, at least this the company is on the right track. The business is correct, and the way we feel the charts are shaping up, we could see some kind of a consolidation between say 5,800 and 6,200, and above 6,200, 6,220. This move could accelerate up to 6,650, 6,700, which is the old resistance zone now. So if someone is already added, then yes, 5,800 should act as a trailing stop loss. And we feel that this rally could continue up to 6,600 once it crosses and closes above 6,200.
Okay, all right. Let's move on to another viewer query, that is your Anunay. He's asking the view on Zen Technologies and he has bought it at 1873 levels. He's asking what is the 1 year time horizon for Zen Technology. 1873 levels, the stock is trading at 1730, so a bit of a loss he's seeing right now. But can you expect the stock to recover going ahead, Sudeep?
Lavisha, if you can just repeat the stock's name, I missed out on that. Lavisha, if you can just repeat the stock name once again, please.
This is Zen Technologies.
That's a Zen Tech. Okay.
Yeah. He's bought it at 1873,
Yeah.
and right now the stock is trading at around 1730. So, a bit of a loss that he's seeing at this point.
Yes. So if you see the charts here, all these names, the defense technologies and all these names, they were already under selling pressure at the stock right from January
Mm-hmm.
2025, the first week of January. You see, from 2500, the stock had corrected, it retested its 200 day moving average around 1550, 1600, and it rebounded ahead of the budget say on expected lines when we saw a lot of these defense names move. But the way the disappointment from a short-term perspective has come into the defense space and all these names, we are seeing some kind of a counter reaction here. So overall, the stock had moved very fast, and now we feel that we might not see the same kind of trajectory, the same kind of speed in terms of a reversal. But if you see positionally, 1580, 1550 zone will act as a strong support on the downside. That is the zone where August and September the stock had consolidated and then broken out. So we are now once again back in that consolidation zone. So expect the stock to consolidate between 1580 and 1800 on the upside. Above 1800, 1830, the stock could once again start its at least showing some positive traction on the upside.
Okay, just one last question before we let you go, Sudeep. What do you think that this is the time for investors to shop? And if yes, then what stocks do you recommend?
From an investment perspective, yes, this is the time to add some good quality names. But I would focus more on large caps and specifically say a stock like Bajaj Finance. Now, the stock, if you see the monthly chart, there has been a big consolidation that had happened from a long-term chart perspective, right from February 2017. The stock had seen a one-way up move till September October 2021, which was closer to 7,900 8,000. But then since last 3.5 to 4 years, the stock is into this 1,500 point range. And right now, given the kind of numbers that had come in the previous week, the kind of boost that the consumption space is now about to witness. And remember, all these, say, consumer electronics or all this, wherever there are EMIs possible, Bajaj Finance is the leader there. So I feel now that this could be the next few months for Bajaj Finance where it could see some kind of a better results also, given the kind of backdrop and given the kind of trajectory that the company has announced with respect to its results. And on the chart, decent consolidation has already happened in this name. And we feel that at the current levels, this could be added with a 7,700 stop loss on the downside and a 8,400, 8,800 target on the upside. This view is from a 6 to 12 month perspective and not from a immediate 1 or 2 weeks perspective.
All right, with that, we have to let you go, Sudeep. But thank you so much for your time and answering our queries so patiently. All
Thank you
right.
so much, Lavisha.
Thank you. All right, let's take a quick check of the markets. Well, Sensex is, off its day's low, but it is still trading in deep losses. We're at 490 points downtick coming in for Sensex, and Nifty is also down about like 23,350 mark at this point of time. Some of the top gainers, which we were not seeing in the opening bell, that was only two gainers that we were seeing, but some of the gainers have come up on the screen, and we can see Titan, Maruti Suzuki, Bajaj Finserv, Bharti Airtel, all of them doing well. Bharti Airtel up about 1%. We'll be seeing the Q3 results, which is coming in this week as well. Nestle doing well, 1% coming in for that. Sun Pharma also doing well at this point of time. But of course, majority of the sectoral indices have dipped in the negative territory, apart from Pharma Index, which is showing a bit of strength, 0.2% gain, which is coming in for the Nifty Pharma Index. But moving on, let's guest our fundamental guest for the show. We have Aashish Somaiyaa, fund manager of WhiteOak Capital. Aashish, good morning. So good to have you back.
Hi, good morning. Thanks for having me.
Ashish, investors are slowly digesting the budget news. We saw a lot of consumption boost, but now today over the weekend we saw plenty of uncertainty, which is going on the global front. Trump's tariff actions are out. So, what do you expect to drive markets from here on?
See, I think that, two things which I kind of observed on the budget. One clearly is that, in the last 2 to 3 years, if you see, all the budgets were about 20-30% hikes in capital expenditure, right? And if you see in the last 3 years, most retail investors or, even mutual fund investors, maximum returns have been made in, sectors which are related to macro, public policy, macroeconomic variables, all the PSU, railway, infrastructure, defense, PSUs by and large. And I think what happens is that everybody wants to talk their portfolio, right? So when the budget comes up, that's what is there in the portfolios, and that's what has been correcting in the last 3 to 4 months. So I think participants, kind of enter the budget expecting that the budget will talk to their portfolios, because that is what has worked in the last 3 4 years. I don't think that anybody started the budget day expecting that at the end of the day you will see FMCG stock and quick commerce being the top gainer. For a few years, people are used to seeing PSUs and railway, defense, infrastructure as top gainers. And I think whatever market rotation, sector rotation we've been seeing in the last 3 4 months has only got kind of cemented. So I think this sector rotation is kind of playing havoc, or at least, impacting people's perceptions. And second thing, of course, moving on to your part about the tariffs, I think ultimately tariffs are a means to an end. I think we know that the world is moving from being multilateral to more bilateral, right? So we have to watch for how it plays out. I don't think in the long run tariffs will be effective because they are counterproductive for the US economy itself, correct? But on the other hand, if it continues like this, then you will see the US dollar, ultimately US economy performing poorly and the dollar eventually depreciating because of the impact of all of this. So somewhere I think we need the US dollar and the US markets to settle down. Maybe in the next month or two, there'll be some volatility, but when the dust settles, we'll realize that the budget is not as bad as is made out to be by the market reaction.
Okay, okay. But Ashish, the budget, it has clearly shifted the narrative to consumption from capex itself. So how would you bring a change in your portfolio allocation as well? And what does it mean for capex themed stocks? Do you believe that the party is over out there?
See, what I shared with you is my observation about the market and the participants' kind of, reaction. As far as our portfolios are concerned, we are not really top-down or sectoral kind of investors. I mean, I would call that we are benchmark aware. Our main task is to beat BSE 500 as a benchmark, and the benchmark has pretty much everything, correct? So, our portfolios will ultimately just reflect, when all of what is happening, it will reflect in our hypothesis about cash flows of companies. It will reflect in our hypothesis about valuations, and definitely it will result in some changes in terms of sectoral allocations. But having said that, even in the last 6 to 12 months, we've consistently been overweight, private sector financials, capital market companies. We've been overweight consumer. If you see consumer discretionary especially has been a significant overweight for us over the last few months. So I don't see any immediate actions in the portfolio, but yes, whatever is happening in the market definitely suits the way our portfolios are laid out.
Okay, okay. But Ashish, do you believe this budget is good enough for the FIs to come back? Because while we are targeting a lower fiscal deficit, our gross borrowings have hiked, and even Moody's ratings that post-budget said that they're not very convinced enough to give India an upgrade to the rating, because the country's public debt needs to decline very materially for an upgrade as well.
Yeah, see, I think, if you just walk back, I mean, the market made its peak in September 2024, right? End of September 2024. First, there was minor talk about reallocation to China, but from there on, it has continuously been a Trump trade, right? Obviously, right-wing, business-friendly president talking about taxes, talking about AI investments. So US market kind of, there has been some reallocation to US market, dollar appreciation, relative depreciation in EM currencies, and some outflow from emerging markets. So India is just part of all of that. It's not like India is getting any special treatment. Our currency is depreciating, all EM currencies are depreciating. We are witnessing outflows, all EM markets are witnessing outflows. In fact, we are a relative outperformer over the last year or so. So on your question, my sense is that, when we're talking about FIs coming back, it's nothing to do with our market. Yes, valuations were high, they have corrected. But FI coming back is, I think, more related to their home country. If the US market cools off a little bit, if the dollar cools off a little bit, you will see FIs, looking to re-enter. Because on a relative basis, compared to 6 months back, the currency is down and market valuations are down. So I'm sure from their perspective, they will actually start seeing more value than what we will see, because for them, even currency matters. And I think at some point in time, you will see in the next 2 to 3 months, when the dust settles on US markets, the dollar, all this tariff related geopolitics, eventually you will see them coming back maybe in the next couple of months or so.
Okay, okay. But Aashish, now that one event is down, the budget, so we have the RBI MPC this week. The consensus is for a rate cut, but what are you expecting and what are you watching out from the RBI commentary?
See, I think already the stance in the last, say, couple of weeks or 3 weeks, the stance has become accommodative. You have seen them doing a lot for bringing liquidity back. Intervention in the dollar market has kind of come off. You have seen the currency slip off a little bit, which also eases pressure on the monetary policy, because then we are not working hard to defend the currency. And, we are allowing it, competitively with other emerging markets, our currency, we allowed it to depreciate. So I think both of these things result in a bit of accommodation as far as monetary policy is concerned. And my sense is that the way the budget has been presented, and, while it is on the path of fiscal consolidation, it will definitely be a big input for RBI. I would not hazard a guess in terms of rate cut or not. Not qualified to do that. But definitely what has happened over the weekend will be a strong input and will only enable the central bank to be on the path of, providing more accommodation for growth to come back.
Okay, okay. You said that the growth is expected to come back. So do you believe that from now on we could see some earnings recovery? Because so far this Q3 has been, there's no new surprises, no new disappointments also. But from here onwards, even for FY26, what are you expecting in terms of India Inc.'s growth front?
I'll be grateful if you can, repeat the question. I couldn't get you clearly.
Okay. No, Aashish, I was asking that you said that from here on we can see some growth which would be visible. So does this mean that from here on we can see some earnings recovery from the India Inc.?
See, I think, if you really ask me, when you're talking about earnings, it's just that the sectoral composition in the last 3 to 6 months, what you're seeing in the market is not so much of a correction at the index level. It's more the sector rotation. And I think that is what is also the market is sensing. That is what is also going to happen with the earnings, right? So my sense is that you will see double-digit earnings growth in FY26. I mean, low double-digit kind of numbers in FY26. Whatever we have witnessed as a temporary slowdown in the first 6 months of FY25, I think that was kind of a trough, and we will start recovering from there starting this quarter. And I think if you ask me 1 year forward, you will see low double-digit earnings. But my sense is that the composition of earnings is what is likely to change, and that is what the market is already trying to factor in.
Okay. But apart from the budget's consumption strategy that everyone is talking about, what else are you watching out, Aashish? And what should investors' top bets be after? Because, we've seen quite a tremendous correction from the September highs, and Nifty's also valuations have converged to its 5-year average. So where should investors take their focus on?
I think, I always advise, our investment advisors, mutual fund distributors, and obviously investors at large. I always tell them that one has to be a bit counter-cyclical or a bit contrarian. Look, what was happening was, like you rightly said, even in September, when the Nifty was at its peak, even at that time, if you saw 5-year CAGR of Nifty, it would have shown you 16-17%, and maybe now it is showing a little lower. So in the last 2 to 3 years of rally, I don't think the Nifty has ever given any outlandish performance, barring the early spurt in 2021, that was crazy. But other than that, in the last couple of years, we've not seen Nifty anytime showing outlandish returns or Nifty showing returns which is out of whack with its earnings, right? So the large cap index has been reasonable all through. It's not so much about the Nifty. I always tell our investors to be a bit contrarian or a bit counter-cyclical. The reason being that for 2 to 3 years, you consistently saw policy-driven sectors, macro sectors, PSUs, and all of them just became themes. There was no discerning stock picking. There was no heterogeneity. The moment you said railway or infrastructure or defense or even PSU for that matter, no stock picking. Just everything starts flying. And on the other hand, if you take private sector financials, if you take some of the healthcare firms, if you take capital market companies, a lot of them, despite showing earnings, they were not, a private sector bank index, I think last 5 years CAGR is low single digit or, mid single digit or something like that. Now, that is not reflective of the long-term delivery of those segments of the market, correct? So I think there has been a lot of consolidation in some part of the market, and some other part of the market has been on a tear. So I think people just need to ensure that their portfolios are not where the market was a couple of years back. They need to rebalance and reorient the portfolios to today's reality. Like they say in English, there's like not a proverb, but they say that you got to shoot where the rabbit will be. Of course, no intent to harm any animals, just taking it as an example. I think people are shooting where the rabbit was a couple of years back.
Okay, all right. All right, with that, we have to let you go, Aashish, completely timed out, but thank you so much for your time and hope that we connect with you soon.
Thank you.
All right, let's take a quick check of the markets. Well, we are at the day's low. Sensex has plunged about 700 points, and Nifty is also below that 23,250 mark. So yes, quite a bit of a deep sell-off that we are seeing at this point of time. Majority of the sectoral indices have also dipped in the negative territory. Sharp cuts coming in from the Nifty Energy Index and the Nifty Metal Index. 3.5% cut coming in for both the indices. India Wix, which had spiked up by 5%, that has cooled off, but still up about 4% at this point of time. 14 odd levels it is trading at, and mid cap and small cap indices are also not doing well. Small cap seeing a cut of about 1.5%, mid cap also down about 1% at this point of time. Top gainers on the Nifty include Titan, Maruti and Nestle and Eicher Motors. So majority of the consumption themes are seeing a good booster in today's market. We can see auto and FMCG dominating the top gainers on the Nifty 50. However, in the top losers we can see Coal India, ONGC, L&T. Majority of the capex themes we can see L&T, Coal India, Hindalco, NTPC, Tata Steel, all of the metal names are definitely not doing well. But with that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell, and we will be discussing about how the market developed, what the stocks were in focus. Until then, signing off, do stay tuned to moneycontrol.com for all the news updates and market insights.